with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? You higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We were streaming not too long ago and the price action just came back right to where we started, which is why I said I would be looking at how the 6 hour closed and not panic as I was down in that trade just a moment ago. Let's go into the charts and see where we are for the monthly candle close, and that coinciding with the weekly, daily, 3-day, 5-day, and how does it all tie together. So on these daily support and resistance levels in gold here, it looks like that daily sell-off indecision doji / shooting star managed to close above the 236 of that bearish trend-based fib extension, so we're just not there yet. And it also closed above this 706 level of our diagonal fib, which we've had price trapped in since January. So we're seeing this hold potentially. If not, we could gap down to the 6.5 down here and the regular fib down here at 27.8. Until those times, we're just consolidating sideways, making up our mind, inducing some liquidity into the charts. What is this heat map that I pulled up here? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, or over leveraging themselves to be liquidated to and burnt to a crisp. So let's see who got burnt to a crisp today. So just a moment ago, it seems we were streaming and we watched this pump up to here, and they were right up in this region when we said goodbye, and we said we would take a look at the 6 hour and how it closed, and it continually closed beneath our baseline, so that's what kept us in the short. And they came back with a fervor to the poor soul of 196 million is off the table. If we go forward in time exactly, they went down to those bubbles and popped them without hesitation. Is this other $196 million character down at 2707 or 2907 still on the books for being liquidated? This is why you had this short rise of the divergence spawned off of their dead carcasses. You had some shorts also open, which they came back to. There is another short pool up here at 29,565. Do they have the strength to muster to come up to these pools because of the imbalance of the shorts now that opened in the opposite direction? So it's all about juxtaposing these bubbles and the imbalances they hold. 2 live streams ago, we were talking about this kind of uncertainty of the short because these were opening up more shorts than longs, and now you're seeing more shorts than longs open up here at this current moment in time. Are they going to go lower and to try to take out this 196 million stacked liquidity pool below, or did they spawn enough divergence to come up to the 30k region again? That is what we are here to figure out. We did the liquidity heat map justice on the higher time frames, but we'll do it just a little bit nicer again. Shout out to everyone here. Please consider subscribing if you have not already. And yeah, this high block capital does cost a pretty penny per month to share with you for free, so I don't think it's much to ask for that like in return. Let's see if it loads properly. So our short, which was down significantly, they're paying us to keep it open, so we might as well just see how that percolates a little bit more. So let's see. Here we go. 12-hour time frame does show a little bit more heat down below. I don't like looking at the 12-hour though, so we'll just skip to the future of the expanded 7-day time frame. My cat's sleeping on my lap, and my mom's in town from America. She's watching my son, her grandson, my son. She's never met before because of COVID. So by the 7-day time frame, you have a pool that is up at 30,300, which also coincides to what we were saying earlier on the higher time frame. And down below, you also have single digits of liquidity, but still looking thick, not sparse so much. And they did come up to here and stop. So what was that about? Hitting the range high of the internal liquidity range. So are we going to see that bounce below here and start to target the pools below? Let's find out. Let's expand our vision to the monthly external pool. It is Monday, May 1st, so we'll go over the candle of the monthly as well. So as we see this pool paved to 34k, this was giving me pause as we started to surge up here. Will we continue to eat this liquidity? That is the question on everyone's mind. Are we going to go higher or go lower? So the path to the upside when we were here was paved, and I was watching it closely, and we for some reason came back into this local liquidity range pool. We do have some liquidity still pent up here on the 28.9k below levels, but does not compare to the double digits at 30,100 and above. You're starting to see double digits up to 30,300, and then it starts to get to almost 10 billion at 30,004, and the double digits reappear again at 30,800. You get the double digits down at 26.8 as well. If you were to Bart Simpson down and get these, you could get those double digits in equal effect on this time frame. So it's even Steven, but if you were going from immediate price action, the move to the upside would be the shorter distance to travel to take out the liquidity there. Let's expand to the 3 month. This artist is Shingo Nakamura. I like his chilled out trance. I'm not monetized, so I don't need to worry about copyright just yet. So, as we expand to the higher time frame here, this is where I start to see an imbalance to the downside, which is why I have a short open, not a long. But once again, unless we can break this 29,232 on the Coinbase chart, then it doesn't mean a thing. So let's go back to that pool. So we need to get, if you look at these double digits now at 25k, you're getting over 100 billion there, whereas you're not seeing that in full effect on this time frame, and you are getting 100 billion down at 22.6 and 19k and below as well. So this extreme tug of war of the longs versus the shorts, the longs are clearly winning in terms of numbers, which means they could lose the tug of war, lose the trade as the rope gets pulled towards them, that they pull on themselves. This is the analogy I like to use for trading, is the majority always lose the trade but win the tug of war, because the number of longs are pulling against their direction and the shorts are pulling against their direction. So you look at which pools are in imbalance, and that imbalance will give you a sense of where the price wants to go, which is to munch on that liquidity. It wants to munch on the direction which stands to gain profit for the market makers / liquidity providers / exchanges. So you look for those imbalances and try to ride with, not against, the market makers. So you try to think with that market maker mindset, that triple M mindset in mind. So if you were to Bart Simpson back down to here and eat up this liquidity, this would be a narrative shift as you start making lower lows and people get into bearish mode. Now, when did this happen before? Well, let's go to the 6 month to start to show you. We've done this many times over, but it's nice to do again and again to remind ourselves and others how that works. So in the times past, this was in February 10th, we left a large pool of liquidity up here at 25.2. I said they will come back for this, you watch. And then they retraced down. As they were retracing down, I was like, I just don't see them leaving that there. And they came back with a fury and popped it without hesitation over here on February 16th. And then after popping that, the liquidity to the upside was not as thick as they liked, so they started to thicken it up, and by March 12th they had thickened up a pool at 25.5, and they shot up with the passion at that Silicon Valley Bank crash idea. So this type of retrace in order to shoot up, so you knock out the longs, they created lower lows, people were getting bearish, but it was a 618 bounce that caused us to bounce up with the fury. And is this retrace enough? Do we need to come lower and knock out this entire range? So this entire range here is daily time frame. So if you take this entire range from here to here, this is 40 days of traders. And so this entire region is their sell side liquidity. What is sell side liquidity? It's when the longs get put into pain and have to sell at a loss. And so that sell side liquidity pool of all these longs that are expecting, 40K and above, would they pay those guys without trying to stop them out? Was this retrace their attempt to stop it out and somehow was staved off due to, I don't know, miners buying back or some sort of the bank impending bank failure? We did catch this double bottom last weekend and talked about that, but we are thinking about that retrace into these pools, just because if I were a market maker, I would not want to pay them as we go higher. It just makes sense. Why would you pay? There's obviously some 100x's somewhere in here getting paid 100 times their money, so they would try to maximize the short pain before they come into the pools below. So on the 6-month time frame, this also imbalance becomes clearer in terms of what is located below being more than what's up above. So you see this thick 87 billion down at 22.5 most notably. Over here, the graph on the left starts to change its value as you increase your time frame. So the 6-month time frame shows you that 22.5 being the thickest of this local region. So do we come down and start to eat this 25K? We did that before the last time we had an imbalance up above to below in this similar fashion, and we had it caked up nicely for them to take. It is pretty caked up nicely, but it is caked up on both sides. So it's an ambiguous point. As we were rising here, I started to second guess myself, because you should not be married to one side or the other. But as we return to equilibrium, and that possibility of that 3 taps to the high double top M scenario could be a Bart Simpson down to these regions, we could come eat these guys for lunch. So that's on the table still for the bearish trend-based fib extension level. As we expand to the yearly time frame, it gets more ambiguous as the pool's color dwindle from yellow to aquamarine, but the value is still high at 100 billion at aquamarine and 200 billion at yellow. So we don't nearly have 200 billion on the charts, except down here at 15.2. That's a mighty long ways away, but still a tether pulling us to the downside. As you look in the local regions, you see some nearing $100 billion at 32.4 and 100 billion at 32.8. That's $200 billion just above at 32K. Just locally above at 30,400 you have 40 billion, and just locally below you have, looks like that's the only pool of 40 billion, and down below here you have 16 billion at 28.8 and 28.4 you have 21 billion. So these two regions equal what is dangling above here, so they cancel each other at this point. When we were hop, skip, and a jump from 30,400, it seemed reasonable to take that. But it's very strange. When they leave something, they just leave it. Similar to here, they left $162 billion at 25.6 and just said, nope, we're not going any higher than that. And then they started to retrace. So just because there is liquidity above, like this was on February 23rd and 21st, we had all these hundreds of billions of dollars in shorts, but they also had them hook, line, and sinker, because these shorts were open since August 15th. So they knew that those guys weren't going anywhere, and they were also hooked in some other guys. So they wanted to stop out the longs before they came back. So do they have these pools under lockdown or not is the question. Are they in drawdown hell and they can afford to come down and make them go to break even or whatever as they scare out the longs? That is the question of the moment. Let's go back to the 3 month and then we'll go into the charts and start to look at the monthly candles and so on. Let's see how the chat's doing. Booyah. Thank you for coming on in. Alright, so we're going to go away from the Coinbase chart and go into the Binance where I have my fib levels. I deleted them recently because I did the split screen and it added some stuff from long ago, but I just did the new levels over again. It's not that difficult to do. We can do that on the live for you too, but basically it's the trend-based fib extension tools. You go to your fib extension here and you favorite that, and it's 3 clicks, one for the impulse, one for the retrace. This is the upside one and the inverse is the bearish one, the impulse to the downside and the retrace to the upside. And these are my settings. I use 236, 786, 0.65, 706 for those institutional bounce areas / trapdoor opening to the whatever side, and the 11382 for take profits, and 1618 and 2 for Hail Marys. Okay, so from this impulse to the downside, to the rise, to the upside, this retrace contains some math which shows you the 236 zone, which we are holding currently, that if we break beneath this zone, then these fib levels below here, these regions from the 0.65 all the way down to here, are the bearish trend-based fib extension levels. Now the inverse is true too. If you take this impulse to the upside and then retrace down to the downside, it was a very shallow rise retrace, so there 236 happens to be here, which on the daily time frame we rose up, and we've been getting rejected off the 786 of the bullish trend-based fib, and the 706 and the 65 has not been giving permission. So is this a stop hunt rise before we drop it? That is the question, and that is why I am in a short still, questioning it as my TA, and that imbalance on the 3 and 6 months suggests going down to here at least. So I'd love to see it come into these pools and stop out that 41 days of longs that are still open, because it just seems like the smart move to me to go stop out their sell side liquidity before going higher. And so the idea of inducing a strength, people will be drawing their Mario flags and then they'll get induced into a long position, which will pave the journey down lower, perhaps. Let's go to the weekly and see how the weekly treated us. So we saw a red week, and then this week was a reclamation week, which happened to close just beneath that 236. Interesting to note. And the other weekly, as we start, is starting to climb up to create a tweezer top, perhaps, who knows. If we look at the stochastic, it gave back a little bit to the value of 60. Let me turn this off real quick. And yeah, so our month of April was a spinning top. Know your candlestick patterns. I think I might have it here. Let's go to my desktop actually. Candlesticks. So your candlestick patterns is a spinning top. So we had here a bullish spinning top. This is kind of when you have a sell-off wick and a buyback wick here. You can find candlestick patterns on Google, that on YouTube, or not YouTube, Google, and then you can find these like bullish and bearish patterns. So that is kind of a bullish, but it's kind of an indecision one because it's a fat chubby one. So the indecision spinning tops are neutral, they're kind of in the middle. This one is more to the upside. So we could be seeing that indecision on the monthly before that retrace. I've seen some news about the macro cycle being some sort of retrace zone in effect, perhaps before the halving. So going sideways or to the downside could be the play on the macro time frames for before the halving. Where do we see that top ensue? I have some ammunition on the sidelines to take another short at another time. We'll see. So the monthly, we had a previous month stop out here at, what is this value? 28,587. So we are currently above that zone. We closed above that monthly support here, which we also wicked off of here and also wicked off of here. So is this a reclamation of this region, part of this monthly candle, this section of the monthly candle at least? Are we reclaiming this as support on the monthly time frame? That is an interesting thing to see. If nothing else, we are entering into resistance of this huge monthly candle to the downside last June. And if you were to take this retrace of this candle from top to bottom, I believe we are at the, turn this back to basic, there we go. So we got wicked off of the 886 region, so we are reclaiming that 786. We're in the red zone, last resistance point zone. Is it going to treat us well, or are we going to get rejected off of this and retrace to equilibrium? Today we're going to go off the with right now just off the inspiration of this. What is equilibrium and what is premium versus discount? Okay, so based off of this single candle here, you can look at that fib retracement as anything below 0.5 as discount. So this is a discount price for Bitcoin. Anything below 0.5 and anything above 0.5 is premium. These are smart money concepts which can be Googled and watched to learn more in detail, but we're just going to go over the basics. So anything below 0.5 on this monthly candle would be considered a discount. So as we entered beneath this 236 range, you could even extend it to the entirety of this drop to the downside from this impulse, let's say, to the downside, and anything above this 236 would be discount price. So you wait for that support to hold above the discount. Here was the liquidity grab, and coming back above the 236 you would consider entering a position. Now, when does it start to get expensive? When you enter premium. And so longing here is not necessarily where I think to long a position. I was pointing out the idea of the rocket ships on my indicator down here at 16 and 15k. It is also the schematic for the website that was made back in November before we knew the bottom was in on momentummaster.info. If you scroll down to this is the exact bottom of Bitcoin before we knew it was the bottom. But we were pointing out that's where you would kind of look at it because everything is on a discount. Now you're kind of in a premium, so you should be thinking about a retrace idea. What is a retrace? Well, having some sort of even shallow W formation is something to think about, just as we had the opposite up here, which was the M. So you have these M formations and these W formations, and of course this is a monthly time frame, so are we going to see a few months of sideways action, a retrace? I have no idea, but just a single W doesn't seem that sustainable without that double bottom goodness. So the double bottom goodness is what I like to see, and that's where you'll see it on these lower time frames. So this premium versus discount. So when you get into the premium, you think about possibly selling. And so if you were entered into a buy down here, this is where people would be distributing their buy. And so if you wanted to ride that down, you would be thinking about selling, potentially speaking. Now, if you go to these, there's a lot of minutia and bounces within, so there's nothing wrong with scalping longs and things like that. But positionally speaking, this was your good 618 bounce right off the 236. So here was the ideal buy for BTC. If you were a risk-averse person, you didn't know whether this was real or not, we got to the equilibrium point, we went slightly above, got sold off with a fury, and you're like, you know what, this level is a good discount for me, I'm going to go off this 618 bounce. And you would have seen massive gains off that simple concept alone about buying on a discount, selling at a premium, looking for these 618 retraces, bounces, and it's also the local, the external range 236. So this is why I color my retraces, these colors, is the 236 is blue, is green for the entry, and the golden pocket being 0.5 and 618, that equilibrium zone, and then that starts to get premium at 618. So this is what you look at on these macro time frames to think about, where are we in a premium or a discount, locally speaking. Granted, this is previous support back here in 2021, so at this time it was a discount, and then we saw ourselves come up here. That was also during a hyperinflated 2020, stipend handout, Fed hyperinflation, worry about the pandemic, just printing money with no tomorrow idea. So this is kind of hyperinflated and not real. And as the Fed claws back their money with their financial repression, it's not the same time frame to think about that the same. So this is extreme resistance now because it was previous support. So previous support becomes extreme resistance, and you are in that premium for this local downtrend we had. So you tell me, is this where you want to go long, or is this where you want to go position for a retrace / double bottom? So we'll look at the momentum in a bit. We're just going to look at some ideas here, and then we go to the 5-day. We're going to collapse to the 5-day here. I don't really do this so often, but let's just do it anyway. So we can remove this retrace. We have the idea of premium versus discount in mind. We can remove that. We already know what that means. So 5-day, I think we need the momentum to see the juxtapose the differences now. We already got the daily and the weekly levels. So let's turn on our heads up display. Let's see. Is it on? There we go. Alright. And let's turn these bad boys on. So the interesting thing to note on the Momentum Master, we had our rocket ships. Maybe if you go into the momentummaster.info and toggle these on, you could see we had that local rocket ship on the bottom at Bitcoin at 15K, and they gave you multiple opportunities to buy, not just one time, also in December too, but it had it back here and it had it all over here. They had these positional long-term ideas in mind. On the 5-day even, it closed there, so that's pretty interesting to note. You had the baselines crossing and scooping up the price on the 5-day here, You did get a cross down event, which then proceeded to dump on you for another 5 days. One thing to note, interestingly, is we have another cross down event confirmed here. We had an initial sell-off, but are we going to have another severe red candle similar to the last time? We had a small sell-off and then a bigger sell-off. We had a small sell-off. Is there a bigger sell-off en route? These cross down and cross up events are not to be ignored on Momentum Master A. What are these things? Well, they're called the baselines. You can go toggle them through the website and see for yourself and read about them. They are the first signs of reversal, and that's why we've remained kind of in this short for the last few days, because we've been watching those cross down events cascade from the 4 hour to the 6 hour, and now this 5-day one is in effect. The one thing that we're staving off here, so the 5 day is on the outskirts of this Keltner channel. What is the Keltner channel? Well, it's a ATR based Bollinger Band type thing. When you reach the outskirts to the top, that is over bot signatures, and when you get to the bottom of the Keltner channel and outside of it, then you can consider this to be oversold. And this is something that is fractal in nature, which will appear on all time frames, so you can use that to juxtapose confluences to the upside and downside. And so we are at the outskirts of the Keltner channel on the 5 day here. If we also go to the weekly, because we skipped that with the indicator, we'll go check it out. We had that nice shift, the thinning of the cloud and that kiss to the cloud off the 618. That was a beautiful opportunity and confluence with the indicator. What is the trend cloud? Well, it is a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. So as the selling volume was thinning here, even though you were dumping and it was thinning and turning slightly blue, that could have given you your clue to the upside. And so these give you simple clues, even with the bearish retest here, as this blue is thinning for that downside momentum. So we're seeing a pretty thick blue, increasingly blue, as we go higher. So the trend is thick on the weekly time frame. The angle at which it's going up is not as thick. It had a lot of downward momentum to stave off. So this is interesting to note, but we are starting to see that increase of that volume and the increase of the average true range. It would take a 25% drop to change this trend on the weekly time frame. So the weekly trend is bullish, undeniably so. And yeah, looking at the 5 day, we are reaching, oh, I forgot to note. So we are also reaching into resistance, which is the weighted moving average and the adaptive moving average. These are also, the baselines are above the price. So we are possibly seeing that cross down potential on the weekly. Interesting to note, this is the first time in a while we have seen the baselines kind of holding a lot of the time. But here we are getting them mighty close to one another. If we were to see a red week, this would definitely cross and give you a baseline confirmation cross as we reach the 200, or the similar, this is just the adaptive moving average and the 200 weighted moving average. So when these tend to get rejected, as we saw here, if we get rejected off of this 200 level, then we could retrace feasibly into this zone, and that would create the cross down event with the baseline. So right here you're getting a very potential resistance signal based off of how the price action is beneath all of this. And you're at the top of the Keltner channel as well. So despite having these levels, these would be maintained even if you came down to here, is the idea. So if you retraced down into here even and bounced, that's still bullish because you're maintaining the ATR. So in terms of this resistance above, could see you getting knocked back down from that region on the weekly time frame. So we already did the 5-day, so let's go back one last time to make sure we didn't miss anything, then we'll go to the 3-day. Yeah, so you have the 200 weighted moving average here, also at the resistance level on the daily time frame, and the baselines above the price with the cross down event confirmed, and the price beneath the baseline. So the last time we saw that, there was a 5-day dumpage down to that 618 level. Is that going to occur here? I don't know, but could very well be based on history and math. Here we had the 3-day cross down event confirmed before it dumped. So this is why these things are leading. On this candle here, you saw this cross down as we reached the cusp of our potential here, and it crossed down. Then we saw 3 days of red. So this is why we talked about that idea of shorting, I think it was 2 weeks ago. Yeah, we were talking about that cascade of cross down from there, and we're at the outskirts of the Keltner. Are we getting recharged off of these bands, or are we seeing the suppression of that cross down momentum? If you're a stochastic RSI trader, the Momentum Master is going to suit you nicely, because you turn price action into a stochastic RSI. So when you get these bands beneath the price, it's kind of like the stochastic is oversold, and it starts to come up and scoop the price up. And when they get above the price, you get overbought, and it starts to take you down. Similar fashion here. This is why I turned the opacity down on my candles, so I can see the prominence of them clearer. It's not inbuilt to the indicator. I do that separately. There are some people in the Momentum Master Discord who just turn off the candles entirely and just trade like this. Someday maybe I'll get there, but not quite yet. Looks like we're getting rejected at the 236 right now as we approach positive value in the trade. And yeah, let's go to the daily time frame, shall we? We're going to give you that extensive breakdown, hopefully worth your time and attention. So the daily time frame, we were talking about this curvature here, and when these things curve, it does do some meandering of showing support, but the curvature does express some fatigue, as the angle is not the same as this upward angle here. So as we chill out and this starts to wane of sorts, that does not show a sign of strength, that shows a sign of weakness in my mind. For this happened once before here, where we surged up only to just stop hunt rise and dump to the downside. The one thing that's different in this case is the cross up event. So we had the 3-day, the 5-day, the potential weekly cross down. So the 3-day and the 5-day cross down are battling with the daily cross up. So does the daily cross up only to cross back down again with the 3-5-day suppression? That is the question, isn't it? And we go to the 22. I might be missing something. Let me go back to the daily. I think that was too quick. Let's go back to the oscillators on the daily. Okay, so previously back here on the double bottom last weekend, we were calling the bottom here. We said the liquidity grab of 30 billion down here would spawn some divergence. It sure did. It spawned some hidden bullish on the money flow, which surged us out here. Currently, we're at the 50 value on the stochastic RSI. The MACD had previously crossed at this indecision doji, and it's not moving at an angle which is super bullish, but it is steady open to the upward momentum side. The daily time frame is kind of waning here at this indecision ambiguity point of the 50 level. Could you see that kind of taper out here and dump? Who knows? But you're getting this kind of ambiguity of the 50 level, the even Steven, not overbought, not oversold, hard to read level. But once again, coming back to that angle of the cloud, suggesting that the volume's not stepping up to the plate just yet. And it's ironic, isn't it? Check out the ATR, the Keltner channel. So my trend-based fib extension levels and the ATR levels are exactly the same. So even if you don't know Fibonacci and you just have Momentum Master and you use the Keltner channels, these dynamic support and resistances will have you at hello for take profit regions. So that's why this thing has been finely tuned to a T to give you those ideas. So let's go lower, shall we? 22. As we enter into profit, instead of panic selling earlier and just observing, I go off of a 3 candle close idea. So if I started to see that 6-hour candle close up here as we were going live last time, if it closed strong with no rejection wick and started the next candle green, I had my levels of resistance that I was looking to see not break, and if it broke those, I would have exited my short and accepted the loss. But just because you're in a negative position doesn't mean it will remain negative. It's not realized until you realize it. So the unrealized potential of what you're seeing, obviously I came to a conclusion day in and day out of analyzing, so I'm not going to give up on my analysis and flip sides so easily. I will observe and see whether my analysis was true or not. So here you have the 22-hour time frame slowly bleeding out. It was previously holding support on that cloud, interestingly enough, giving just enough volume to maintain the impression of bullishness, but slowly bleeding out on this broken time frame. Why do I love the 22-hour? Well, I was talking to somebody about it, and basically the 22-hour time frame is an unsyncopated rhythm, if you will. So I do drumming, and you can have like a 4/4 beat, like 1 2 3 4. But if you have a 11/8 beat, you have this kind of ska. It's kind of a broken jazz beat. Those broken beats have a rhythm within them, and same with the broken candles. Why are they broken? Well, one of these candles is 22 hours and one is 2 hours. 22 2, 22 2, 22 2, 22 2. And that oddball time frame of 22 hours with the 2 hour in between gives you these weird pockets where the probabilities reset, where they pool, and you reach that nice support on the cloud here, for example. And it's almost like a radio frequency which is not meant to be seen of sorts, where you can kind of glean some truth that's not clear to most. So here you had the 22 low, and then we surged up, 22 low, and we surged up. And the converse, you had the cross down event on the 22. We talked about that last 2 weeks ago, and we said we watch for the 22 to close with this cross down, and then I'm sold on the short. And then even though we had these fake outs, the fake outs are just that for the bigger move based on these leading signals. And you had the bearish divergence here. So as the money flows up here on the RSI, the money flow index above the RSI here, this to me is expressing fatigue. It does that over and over again, where the money flows above the RSI only to dump it out because the RSI does not give the strength. So this 22 hour is not really looking to double top here. Perhaps it is just going to dump down. If we look at this MACD getting closer together, if this crosses down. The MACD is also cool on Momentum Master B because you can set an alert. I don't know if you guys know this. You can add alert to Momentum Master B. Let's do that now. And it sets to the time frame that you like. If my thing will not lag and show it. Show me the alert, please. But you can add it, and there's a pump or dump option. Pump would be the cross up on the MACD, and dump would be cross down. And you can set them for either. I have it set on the 5 minute, so every time the price action changes direction, it lets me know. So I know whether it's going in my direction based off the last message I receive. So if I receive a dump message, that means it's heading down. And if it's giving me a pump message last, then that means it's going up. So if I'm indisposed, it lets me know what direction the asset is moving, whether I'm looking at my phone or not. Quite handy. So 22-hour time frame, cloud is looking kind of ambiguously bearish despite being above it. So if we come down to this, start to kiss it and see this curve, one thing that's interesting to note is that this is slightly curving at an angle here. So if you watch this, if we jump down, we've confirmed the broken 236, so our short is in play. I'm happy about that. If we maintain this closing beneath the 236, I'll be a happy camper. I don't want to necessarily see it go up right now because I would rather profit on my short. But if you see this start to curve and thin as volume enters in here, and we kiss this on the 22-hour time frame and reclaim some of this vector candle here, then you could consider flipping directions, which I would do as well. So as we dump out of this onto the moon boys, let's see what is going on the 12-hour time frame. We got one concurrent viewer, thank you. Yes, you're waiting for more movement. That's smart. So, as we look at the 12-hour, the 12-hour is ambiguously high, but slowly tapering down just like the cloud. The 12-hour and the 22-hour clouds look similar. This sell-off candle is no bueno for the look of a long right now. Looks like a shooting star to me to the downside, so I'm happily confident in remaining in this trade right now and seeing that this will dump further. The money flow and the RSI are in similar fashion right now. Nothing to glean there. The MACD is curving to potentially cross down and give you that leading confirmation about dumpage, which happened back here. So the last time you saw that on the MACD up here, the cross down event was back on Sunday 9 a.m. So you saw that cross down event at 9 a.m. on Sunday here, and then we dumped. So it's this MACD formula is a leading MACD formula. It is not laggard like normal MACDs. Extremely hard to program, but worth it in the end. So we're starting to see that cross down on the 6-hour here. It was from Saturday 3 p.m. time. So while we did see that stop hunt rise, it never crossed back up fully, and it's still to the downside, crossed down. It was just a stop hunt rise drop by the looks of it. You are getting 3 time frames oversold right now, the 4-hour, the 1-hour, and the 5-minute and the 15 by the looks of it are getting fatigued here. Let's make our way down lower. So the cloud is also thick, starting to curve in nature here with that stop hunt and not giving the same angle it was previously leading, and you're getting that ambiguity here on the stochastic RSI as it plays around on the MACD level. Let's go to the 4-hour. So the 4-hour got rejected off the money flow. So weird how sometimes they interact with the values of each other. I don't understand how that works yet, but it happens. Just like we saw on the 6-hour how it bounced off the MACD even though they're separate formulas. Like, how did that happen where it's bouncing off the MACD here? Like, boing, boing. So weird. Anyway, going to the 4-hour. So you're not seeing the alarming thing here is starting to pump out on you. This is where you start to see potential suppression ideas. If this starts to open up and price action wants to see that reset, then you start to see things like this. This was a thing we were talking about. We had the cross down event and a stop hunt rise. drop and continuation plus the suppression as the Williams reset. So this is why we have the Williams on top of the stochastic RSI. The stochastic RSI alone is simply not enough for me, because you would get in here as it was low and it would dump in your face and you would say, why? Why did that happen? And well, the Williams was telling you the momentum was to the downside. So as the Williams opens up here and tells you its momentum is to the downside, as the 4-hour stochastic RSI tries to take off and get suppressed, similar to here, that's kind of your leading signal on the momentum with the Williams. I did my research on all momentum indicators out there, found the best smoothing and hull smoothing and look back potential and everything, back tested levels where these alarming things are alarming, to let you know in advance where to watch out. So that is something we are looking at. And that's why we didn't panic close, because as long as we close beneath the baseline, that baseline idea is in effect. Similar to here, we close beneath it, it's still in effect. We're closing beneath it, it's still in effect. If it started to close a candle above this baseline, I would have been like, well, they got me. And they did that for one candle here, and then it was downside for days after that. So you got to wait for your signals to get negated before you panic. And you have this money flow above on the 6-hour too. Let's go to the hourly. So you could expect some sort of bounce, just some relief bounce of some kind for this to come back a little bit at some stage. The last bits of reset are always the funniest, because you're like, oh, it's ready to get in, and then it goes and dumps down with a fervor during that last leg of the dump, if it decides to go to 0 from this 9 value. The Williams is getting in a nice buy position here. You aren't seeing the MACD come down to it yet. Ideally, you want to see the MACD in this position here, where he's saying what's up to the Williams, and it looks like a jumbled hot mess down here. But if you know what the Williams and the MACD are, you can make sense of it, and you see the MACD is coming to say what's up to the Williams and give it a little supercharge, and you get that bounce up there. So that's your ideal position, the MACD being in the center. Not necessarily my cup of tea for a long, even though your stochastic is low. The money flow is also above the RSI here, which suggests it could come down some more, similar to here. So we are still chilling like a villain in the shorts. The Asian range. So with this interesting free indicator by Tradinator, ICT Kill Zones Tradinator, you can open up this. It will tell you the specified time range you are in. We are now in the Asian session, Monday. It is false move Monday in Asia. I heard we're down a liquidity pool in Europe. Not sure what the holiday is, but Asia likes to fake pump it before they dump it. Normally into right now time, which is Hong Kong, they start to fade it. So this 9:45 range was the pump before the fade idea, and they normally set it up for London. So similar to here, you see this. Here's not the perfect example. Here we go. So we had this pump up to here, and then they faded it into London. But there's a better example. Here we go. They pump it up and give the suggestion that we are going up higher, and then they fade it. So that kind of, and then they handed off the baton pre-market to London, which faded it with the fury. So the narratives playing off of each other from Asia to London to New York, and the London close generally brings some fire too. So all of these things on your charts, it will display on the 15-minute automatically. If I go above that time frame, it will just disappear from my charts. So I have that up. It's a nice little free indicator out there. So that's a good little nugget of goodness. So we are at the Asian, we just reclaimed that 236. That 236 is just kind of one of those points right now. So you're seeing this cloud sell-off shift to the downside here. even if we manage to double bottom, like let's say this is a W and we come up to here, then chances are you get rejected off the cloud. You would have to break through with the Fury to retest that to continue. But this is, you're getting low on the stochastic on 4 time frames here. So that was a breakdown from the monthly to the weekly to the 5-day to the 3-day to the daily, all the way down. We are now at the 5-minute time frame, and that is how we like to look at price. We got this huge monitor now, so I like to separate them out into different time frames here. I like to have the liquidity on one side here, the liquidation levels on one side, to see all these 100x guys over here, and then I see my monitors very calmly over here for these higher time frames. One thing to note on the 12-hour here is the 12-hour baseline is crossing over the price. So that was something interesting when we saw this 12-hour candle close. So I was sold on the idea of that short continuing nicely. So as long as the baselines hold above the price here, the short is still in effect, the 4 hours in effect, and the 6-hour. And you're seeing this gobbledygook of longs opening up to shorts here. You still have this long pool that has yet to be tapped. Let's go to recap the liquidity one last time as we play ourselves out with an outro. So let's load this up and say goodbye. You want to do AI Doge? Look at that? Sure. Well, maybe.
I'm tired, but I'm wide awake.
Okay, so you got some bubbles down below here. Ideally, you'd like to see a hit. Me personally would like to see a hit down to these regions here and start to see 2847 and these 100 million stacked pools below get hit. The longs that opened up on that pump that got reclaimed are now underwater. So these could be the targets as they are now underwater here. And the sparse broth slash ramen noodles to the right here, up above, there's more broth than noodles. So while this was a target a moment in time when we were up here, that is no longer the case. It seems like we could come down to these pools at 2847 at the bare minimum to knock out that thick band of long liquidity. We are imbalanced by 4.6 billion on this 1 minute time frame. And if we manage to go and Bart Simpson down to here, the liquidity pools do suggest a juicy pools all paved all the way down to 22.5, which is why we are not sold necessarily on the idea of 34.8 just yet. And that is why we are in the shorts. We are trusting the indicators as they cross down and feed us that idea of downside. Let's look at AIG. What is it? AI Doge, the meme coin stuff. I wish I knew how to do that, trade that stuff well. I'm not really into it, so I don't really know. But let's see, AI Doge. USDT, MEXC, BitGet. Ah, okay, so you need a MEXC account. I'm on KuCoin myself. Looks like it's playing some fun, volatile games for sure. Let's go to the daily. It's only been alive for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. And in those 14 days, it's seen nothing but upside. Quite nice for the holders of that. Let's see what it's like on the 12-hour. It's just pumping to high heaven by the looks of it. We got a minute before we bid you adieu. Looks like it's fun for the longers, but nothing goes up forever. You don't even have data for me to show beyond certain time frames. Let's go. Interesting. I mean, it's just straight moonshotting right now. I definitely am not interested in shorting anything like this. Maybe you'd just be looking for those long entries off the crossover events at this time. The volume is showing like purple, which is weird, so it's like stopping volume level. Interesting. Well, thank you for sharing, and I will leave you at that. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I will catch you on the flip.